Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 9th of July 2022, and we're publishing our gold and silver weekly update for the week ending the 8th of July. We will see in a moment the gold and silver prices have fallen this past week. Equity markets have risen ever so slightly, and the key question is, to what level will the FOMC raise rates on the 27th of July, and how we foresee gold and silver prices reacting in advance of that announcement. And we won't necessarily elaborate on this, what may happen to them after it too. So without further ado, let's take a look. First, looking at precious metals, gold fell $67 last week, falling from $1,810 to $1,743, having hit a high of $1,814 and a low of $1,732, a fall of 3.7%. In sterling terms, gold finished the week at £1,448, that's down £48. And in euros, it closed at 1,711 euros. That's down 24 euros. Silver fell 59 cents, falling from 1992 to 1933, having hit a high of 2021 and a low of 1894, so it did actually dip below that $19 level, a fall of 3%, not quite as much as gold's 3.7. In sterling terms, silver closed at £16.07, that's down 38 pence, and in euros it closed at 19 euros exactly, and that's down 0.10 euros. The gold to silver ratio fell slightly from 90.9 to 1 to 90.2 to 1. It'll be interesting to see for how long this ratio remains in the 90s or very close to it. Now, looking at the prediction we made last week, this is what we said, quote, we expect to see gold trade between 1750 and 1850, with 1725 and 1875 as outliers. We forecast silver will trade between 1850 and 2150, with 1750 to 2250 as outliers. Well, gold traded within a range of $82, compared with $57 the previous week, so it had a reasonable spread for its normal transitioning and operated within our predicted forecast until a major dip on Tuesday followed by a further one on Wednesday, pushing it temporarily at least into the lower end of our outlier range, and then it traded for the duration of the week between 1732 and 1750, with 1750 now acting as resistance as opposed to support previously. Now, silver, though, traded exactly within our main forecast, within a trading range of $1.27 between its high and low, and that compares with $2.16 a week earlier. Like gold, silver fell Tuesday and further on Wednesday, and made several failed attempts to rebound, though it did close higher than its low, of course. Now, it's worth repeating the comment we made last week, which applies again this coming week. Quote, precious metals are on the downside with increasing rates, and if the Russia-Ukraine war should suddenly come to an end, then the geopolitical risk investment in gold and silver will also abate, causing even lower prices. They are still at a premium because of this conflict and the fear of where it could lead, unquote. Naturally, there's nothing to suggest that the Russia-Ukraine conflict will be over soon, and so that risk premium is still likely to be maintained for a while. Now, looking at some of the other financials, Bitcoin has risen this past week by $2,490 and currently stands at $19,033. Equities actually rose slightly last week, with the Dow Jones closing on Friday at 31,338, albeit down 46 points on the day, but up 241 on the week. The S&P 500 closed at 3,899, down 3 points on the day, but up 74 points on the week, and the Nasdaq Composite closed at 11,635, up 13 points on the day, and up 508 points on the week. Now looking at oils, Brent crude closed at $107.02, that's down $4.61, and WTI crude closed at $104.79, that's down $3.64 on the week. The dollar index stands at 106.90, that's up a considerable 1.49 points on the week, following the previous week's gain of 0.96. Now on Thursday we produced an update video entitled Boris Johnson Resigns, Gold and Silver Prices Move, midweek update, where we cover a number of the factors affecting precious metal prices so far, up until then, this past week. Now earlier in the week we also produced a video entitled Is Now the Time to Buy Gold and Silver, where we talk about the Pure Gold Company and what considerations you should have in terms of whether to consider purchasing now or perhaps waiting until this round of interest rate rises are out of the way. And we've placed links to both of these in the description box below. If you haven't had an opportunity to listen to them, we honestly and earnestly suggest that you do. Now in our report last week, we stated very clearly that Wednesday's services PMI plus FOMC minutes and Friday's non-farm payroll data were the important days for economic data and potential interaction by traders. Well, firstly, on Tuesday, we saw factory orders for May being 1 percentage point stronger than anticipated, and the services PMIs then on Wednesday similarly were 1% higher than anticipated. Initial and continuing jobless claims were higher than previous, but Friday's non-farm payrolls were much stronger than anticipated, coming in at 372,000 new jobs, compared with expectations of 250,000. This further supports the likelihood that the Fed will raise rates by as much as 0.75% or 0.75% later this month. 0.5% is a guarantee. That's going to happen no matter what now. And 0.75% is most likely. According to the CME's FedWatch tool, there is a 93% probability that the Federal Reserve will raise rates once again by 75 basis points this month. Now we have to be mindful that the dollar strength, primarily caused by the envisaged monetary tightening, is what caused the brunt of gold and silver's price dip earlier in the week. Since March, the Federal Reserve has raised rates on 3 occasions, with each rate hike having a higher percentage increase than the last. The Fed raised rates by 25 basis points in March, 50 points in May, and 75 points in June. Now we saw gold break below what has traditionally been strong support at 1750, and actually stay below that level for 3 days, though there was a degree of stabilization on Thursday and Friday. We're not totally convinced that the non-farm payrolls have totally been taken into account as yet, and it will be interesting to see how traders respond on Monday. We should not be surprised now to see gold trade between $1,700 and $1,800, with these levels acting as support and resistance respectively. Technical geeks will put the low at 1694, which represents the March 8th, 2021 figure, and the high at 1795, the peak of a minor retracement zone. Silver has a marginally better or bigger story to tell. We say this because silver's not just dependent on the dollar value and prospect of rising rates, but also on the state of the global economy. The industrial demand for silver represents a large proportion of its overall demand, and the likelihood of a recession, or alternatively avoiding a recession, will have a further impact on silver in either direction. So rising rates and the prospect of recession will be harmful. Rising rates and recession avoidance will have less of a downward impact. $20 is now appearing as resistance, and some analysts are talking of a dip to $15 in the coming months. We can't actually rule that out, at this stage, though we're certainly not expecting that this week or two. So, before we give our price prediction for this coming week, let's take a quick look at economic data due to be announced. On Monday, we have the 3-year inflation expectations for June. Tuesday, NFIB Small Business Index. Wednesday, the CPI Index and Core CPI Index for June and the Beige Book. Thursday, weekly jobless claims and the Producer Price Index for June. And then on Friday, retail sales, import price index and industrial production, all for June, and business inventories for May. So traders will be particularly watching the CPI on Wednesday and retail sales on Friday. Now that said, we believe that the FOMC decision on the 27th of July is already baked in. And unless there is some amazing disparity in CPI and retail sales compared to expectations, we can all expect a 0.75% increase in rates in the United States. We're even of the opinion that should CPI figures crash, which they won't, and retail sales also collapse, which is doubtful, then the Fed may be tempted to raise rates by just 0.5%. But we do not see that happening in July, to be fair. Now, of course, geopolitics could affect this situation in either direction, but all things remaining equal, we expect the dollar to remain solid, with the index holding somewhere between 105 and 107, with the potential, we can't rule out a 108 figure as we near July the 27th, but much will also depend upon what the UK and EU do in terms of their rates as well. For we hear today that the ECB's Governing Council member, Robert Holtzman, has stated that he foresees an increase in EU rates by as much as 125 basis points by September. So, with this background and what's occurring and what we envisage is likely to happen, where do we see gold and silver trade over the next week? Well, we broadly expect to see gold trade between $1,700 and $1,800 this week, with $1,650 to $1,825 as outliers. We're probably anticipating, until Friday at least, some relative consolidation close to current levels. However, that may change depending on the figures being announced. Now, we forecast silver will trade between $18.25 and $20, with $17.50 to $21 as outliers. We suspect it'll be the following week that we'll see the major move. Therefore, a degree of consolidation again for silver. What do you think? Please do share your thoughts. Also, take a look at the videos I've mentioned earlier in this one. But meanwhile, thank you for listening. Do subscribe, press the bell sign, have a safe, enjoyable weekend, and a most prosperous week ahead. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.